Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Nilkamal. Will it continue to rise from the bottom, or should you invest into the stock? So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now, before I talk about Nilkamal, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. Help you also ask me questions on a daily basis. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on a daily basis. Today, I just put up a podcast on the real estate sector. So kindly join that membership. For detailed market or company talk, or if you have a number of stocks with you, you can directly email me and we can work things out. Now about Nilkamal, established in 1981, it is one of the top brands in the plastic industries and decorative plastic industries with chairs, etc. They provide stylish home improvement products including chairs, tables, center tables, etc. Product catalog, as I said, includes plastic almirah, cabinets, chairs, etc. Also manufacture mattresses and milk packet containers, which is interesting. Market cap of the company is around 2000 crores. If you look at the numbers, then the financials of say the Q1 of FY21, they saw a drop in sales of around 53%. The profit from 29 crores went into losses of 28 crores. Interest burden has increased. Debt has been a problem for the company. Return on equity around 13% and operating profit margin of 10% is not that great, but not bad either in the current situation. High promoter and institutional holding with only 14% free float is a big positive for the company. If you look at the performance of the stock, then stock has been falling for the past 3 years. Since 2017 December, we have been seeing the stock falling, and that was the time it peaked out at 2100, 2200. It made a low of around 8 900 in March, around 800, and then has surged. Had a steep fall, as I said, of 40% in March. Numbers have been okay, it hasn't been that bad, so numbers have been in line with the expectation, in line with what the industry has done, and not that bad compared to what has been happening across the board. It has recovered smartly from those March lows, as I explained, and currently trading at around 1300 rupees. Business has slumped during the last 6 months, but it is coming back into shape, as has been other businesses across you can say segments, across sectors. So I believe that from Jan, Feb, March, so March quarter onwards, things will be completely normalized. And in this you can say season, like the October November season, you could be seeing more traction with the festive season, with marriages kicking in for their decorative business. So we could see better numbers in December than we have seen in September. So things are improving on the ground, as well as things will improve on the numbers. I'm pretty sure about it. The slump in business happened during the shutdown of, you can say, offices and you can say shops. So may see demand improve in the next 6 months. That is my opinion. In my opinion, next 2 years could be good for the company, considering where the stock lies, where the company lies at around 1250, 1300 levels. I mean, at these levels, probably an avoid, but a little bit of declines it can be bought into. The reason is that the demand of decorative chairs and accessories should continue to increase going forward, at least for the next 2 quarters, when the festive and marriage season is around. So November to February, you'll see demand surge. So pent up demand will take care of FY22 as well. You will see numbers greatly improve based on the lower profit and sales numbers of FY21 on FY22. Valuations are still better than 3 years back. So 3 years back, the stock was at least 50 or 40% higher than the current level. And although the numbers for FY22 will be much better than FY18, so you have to consider that. In that respect, the numbers are pretty good. There will be a re-rating of, you can say, the stock price depending on the FY22 numbers and the December quarter numbers, which would follow next. So all this said and done, I believe that valuation is still better. It is a market leader with a number of products under its belt. Along with Supreme Industries, it is up there. Have kept an increased market share over time, and this, you can say, phase of shutdown and with smaller businesses, unorganized businesses going away, is also a great fillip for organized listed players who are bigger in nature in that industry. So Nilkamal, Supreme Industries in the plastic industry, and similarly Bata, Relaxo, etc., other companies there, Liberty, and so on and so forth in the shoe industry. And similarly in other industries where unorganized sector is big, companies which are listed, companies which are in the organized domain would tend to do well, because the people who are in the unorganized sector do not have the funds to keep the things going. So in that respect, I believe the next 2 years could be very good for companies like Neil Kapal. If you look at the technicals of the stock, then there's strong support around the 1,000 levels. If somebody has to really get in this stock for 4 to 5 years, keep a stop loss at 1,000, which is a 25% stop loss, and you could see even 2,200 to 2,600 on the stock going forward in some years' time. The 200 DMA is around 1220. I believe 1200 will act as a very strong support. Keep a strict stop loss at 1020 or so, but I think 1220 to 1180, the stock should find very good support, and those are very good levels to get into for long term players. So any 5% dip, 6% dip in the stock is a very good opportunity. Breakout is expected above 1600, so between this 1300 to 1600 band, it could just consolidate for 1 month or 2 months, and then the big breakout would happen with the September numbers. May decline, as I said, or consolidate over the next few weeks. So 4 to 6 weeks, or at least 3 to 4 weeks, we'll see consolidation. 1200 to 1220 is a strong support. So what needs to be done, in my opinion, if you have it even at higher levels as 1600, then probably you can average around 1200. I think the worst for these kind of businesses is over, and we could see a surge over the next 2 3 years, which would take these stocks higher, probably to new highs, and that would be the time to sell. I'm not saying that you hold on to these companies for say 3 years, 4 years, 5 years. Hold on to these companies for a 40 50% higher targets, maybe in 2 years, maybe 1 year, maybe 4 years, I don't know. So you can average at lower levels. Probably 1000 will not get breached unless something really drastic happens on the economic and the pandemic front. Have a good 3 to 5 year time horizon, and you will make decent money. I won't say you'll make a lot of money, that it will just become 4 5 7x, but you will make decent money going forward. It will surge once things normalize, and have less than 5% exposure in such stocks. So this was a video on Nilkamal. Please like and subscribe my channel and hit the bell icon. Thank you.